Mayuresh, which way are you leaning? Buying on decline or you waiting for better entry levels?
So after the Nikunj, obviously I think waiting a prudent way of approaching the markets, but how do you define better entry levels in a volatile market like this? So one really needs to define how the Fed event is going to transgress, and if one really takes a call that there is no Fed hike probably happening, I think you can go and buy in the markets right now. But again, if one really takes a cautious stance and waits for the Fed policy to actually come out, I think the more prudent and practical approach would be to do that and wait for those markets to probably correct over the next few weeks and invest in a staggered manner.
CK, comment on the bank nifty, because that's the back. I mean, let's be real. For markets to go higher, the bank nifty either has to stabilize or it has to go higher. Now, bank nifty has turned volatile. At higher levels, dumping has started. At lower levels, buying has started.
Yes, undeniably, since other sectors are not really firing as much as they should, and particularly the IT, which has got equal weightage like the bank nifty on the index, I think the mantle has really fallen upon the banks to fire the index further. What is seen here is that the banks have now become a little volatile at the higher levels, and that does not sit very well with trending nature of that particular index. And in any case, we have made it up now till 20,000, 20,500 almost. So my sense is that it's quite unlikely that the banks can continue to fire at this level. I don't think the meeting with the FM also came out really with anything concrete. So that is another small sense of disappointment perhaps. Not that too much was expected. But I don't believe the bank nifty can really push the nifty too much higher. So it'll have to be others now.
Okay, let's focus in on banks because that's definitely a sore point in trade right now, and check in on what the bank nifty is up to. We were loading the bank nifty for crossing that crucial 20,000 mark. Now it's marginally sub, absolutely flattening out in trade. In terms of individual constituents, I think your biggest casualty, and no surprises there, is Yes Bank. It's really the QIP fiasco that has plagued havoc on the stock, not just in today's trading session where it's your top banking draw, or loser rather, down 3.8%, but this entire week. And in fact, if we could pull up the 7-day chart as well of Yes Bank, you'll see what I'm referring to. 1174 is where the stock is currently at. Other than that, you've got IndusInd Bank, Bank of India, Canara Bank, ICICI Bank. Those are some of the other stocks from the banking space too, which have given up their initial momentum. So that comment on Yes Bank in particular on the bank nifty futures.
I think more to do with banking sector. It has its own problem to deal with, and that's the reason stock is correcting this way. Means we all know that Yes Bank is not known for such correction. Whether you have seen major correction in bank nifty or other sector as such, but Yes Bank never corrected this sharply. So attributing Yes Bank selling to do with pressure in banking space, that may not be factually correct. So we are seeing substantial amount of short positions getting built up over here. I think it's more to do with what exchanges have reacted to, or say regulator has reacted to this fiasco. I believe stock is heading lower, maybe towards 1100 or so, and then probably we can take a fresh call there.
Okay, so give me a trading idea, Siddharth Bhambre.
I'll stick to banking space, and it's a short-term trade. It's not a positional trade. I would like to short CanBank, and after quite a while, I'm generating a short trade on a PSU bank. This stock has seen substantial run-up, and today I'm seeing traces of formation of some short positions. It's a preemptive short in an anticipation that the gap which was created on Friday 2nd September, that gap would be filled and stock would drift towards probably 280, 282 odd levels, and stop loss is also nearby. And if you keep a stop loss of 309 and stock is currently trading at 301, go short and trade with negative bias.
Okay, stay with us, gentlemen. We slip into a quick break right here on the show. Got lots more lined up on closing trades. We chat stocks as well as the outlook on the markets in just a bit.
Thanks for staying with us. 33 points is what Nifty has, 33 points up for the Nifty. Now from the day's high, yes, we've reversed, but from the days, but from where we were on Monday, I guess 33 points and the kind of levels we are working with, it's a victory for the bulls. Now on Monday it appeared that, oh, the world's going to end, we could be staring at the serious risk off kind of a trade, but thankfully the Fed fear only lasted for one day, for one trading session, and now that it is evident that Fed will find it almost impossible to move in the month of September, market men, they've started talking about US presidential election, rich valuations, and what will happen to crude. So the market narrative has changed. The headline talk point is still US Fed, but frankly in terms of a market adjustment, that market adjustment is behind us. But today it's all about India's largest AMC, which is ICICI Prudential AMC. In the morning I was at the headquarters, and now one of the smartest fund managers, the CIO and Executive Director of ICICI Prudential AMC joins us. Naren, good afternoon, thank you for joining us. Let's talk about first your understanding of the global setup. On Monday it appeared that things were slightly shaky. It almost appeared that a Fed hike was coming and there was a risk on environment, but thankfully for us that moot point lasted only for one day.
Yeah, actually I don't think global setup is that clear to most people, and it will never be that clear. I think the Western world monetary experiment has reached a certain from bring down interest rates, so it can only go up. Now the central banks would not want it to go up in a disruptive way, and they would actually ensure that interest rates are well behaved. But if market forces take interest rates up, then there's scope for market correction in most asset classes in the world. So the way I see the global setup cannot.
Well, we'll just be reconnecting with Naren. Would be interesting to really understand his views on the markets and, you know, the investment style as well, Nikunj. It's a fairly contrarian view that he has on the markets. I mean, talking about some of the power plays as well to invest in. Well,
there are two ways you invest. One, you buy and ride momentum, and second, you go against the grain and you try and identify value. So when there is fear in the market, you buy. When there is greed in the market, you sell, and that's what I think Naren always manages to do. He's managed to stay out of pockets of cherry consensus, which is for the longest time as consumer staples, and he's avoided some of the so-called value traps when it comes to some of the auto stocks initially. So I've always admired this style about Naren. I like to call him the Mr. Contrarian. So Naren, whereas I appreciate the way you always like to take a very contra call, do you think in this kind of a market it's difficult to take a contra call because there are very limited pockets where growth is visible, and wherever growth is visible, those stocks or those groups are already enjoying a cherry consensus?
That's true, but you can make money out of other sectors. If you go back 1 year back, at that point of time, I remember metals were actually a very, very hated sector, and no one ever believed that metals could see a good bull run, but it happened. And was it a contrarian call? Certainly, and I think I believe at all points of time you will find some contrarian bets to bet on, but you have to do the right research. See, currently, in fact, a few months back, select stocks in pharma had done very badly, and that was a contrarian approach which worked. Today there are many pockets where things are not doing well, like technology, for example, telecom. My old favorite was a contrarian investor. I think these kind of sectors do present opportunities, and if you do...
Naren, my sincere apologies, whereas we can hear you, we cannot see you clearly. One of those days where it's again raining, and when it rains in Bombay, trust me, you cannot blame it always on the networks. I mean, there's a genuine problem out there. Meanwhile, markets, again, a nice little bounce from the day's low seems to be coming. So that, Dominic, what's going on? I mean, is this what, a seesaw?
I believe, some of the stocks like, heavyweights like ITC are doing good at this point of time. So I don't want to paint a picture that, people are buying defensives in name of ITC. Because overall my opinion is still that because of so many long positions standing, you should not take call of shorting this market. At the same time, if there is a bounce today which is happening in market, you should not get gung-ho unless and until you check the data. So let this game be there in today's trading session, and rather than playing to it, observe it and enjoy.
Okay, observe it and enjoy. That's the view coming in on the index as of now, and how to play some of these individual names as well. I just want to focus in on what's going on with the broader end of the market as well, because you've got a number of stocks which are really taking it in the chin, and quality names at that. In the last 1 hour, by the way, pull up the names like Sun TV, that's come under acute pressure right now. One of the top drags on the mid-cap index are currently trading at a level of about 493. Amara Raja is the other name from the battery space, looking a tad weak. Apollo Tyres, and this after having a pretty strong run, is seeing some profit booking as well kicking in, and some of these stocks have sold off in the last 1 hour or so from the broader end of the market. There's also Cairn India, and of course small cap drags include a number of mid-cap IT names. Polaris being a case in point, that's definitely come off from the high point of the day. Add to that list an NIIT, which is looking a little bit weak right now. You've got UCO Bank, of course, in tandem with the rest of the banking names, and HCC is another stock that's under pressure. Meantime, Kunal, let's get in your calls and strategies for the day.
Well, I have two stocks. The first one is a buy on GNFC. The stock has broken out of a triangular pattern. I think breakout was close to 160, 160.5 on spot levels. Looking at the chart patterns and the setup there, I would expect that the stock should probably touch back its previous swing high, which is close to 173. So that's my target for GNFC. That's a buy. Keep a stop loss of 158. The second would be a sell on ACC. Now, on the short-term charts, you're seeing a clear swing breakdown on the stock. Looking at the cement pack overall as well, and the kind of pressures on the shorter term charts, I would expect that ACC, which is one of the weaker stocks in terms of the swing lows, I would look at a target of 1570 on the stock on the downside. Keep a stop loss of 1655 on the trade.
Naren, is my voice reaching you?
I'm able to hear you, Nikunj.
Wonderful, and I can see you as well, which means I can fire my next question at you. Just blame it on the Mumbai rains, Naren, one of those days where the line is just terrible and horrible. So Naren, let's talk about your current contrarian approach. And your current contrarian approach as a house is centered around large caps and pharmaceuticals. Walk us through the rationale. I mean, small cap I thought was the seasonal fruit, and you believe that value is missing in small cap and mid cap, and pharma has been on the receiving end, and yet you feel that pharma could be a contrarian buy.
Yeah, I think if you look at it clearly, whenever you see problems, there is an opportunity for a contrarian. So the number of factories where there have been FDA inspections and there have been problems have grown significantly, giving us the opportunity in specific stocks. So that is how pharma presented itself as a contrarian opportunity, because everyone knows over the next 5 to 10 years more and more medicines will be required, more and more drugs will be required, and India has the best manufacturing facilities in the world. So if you take a very long-term view, I don't think there's a problem for the sector. And as far as large caps are concerned, clearly mid caps, there are a lot of pockets of overvaluation. There are pockets of reasonable valuation, but there are a number of pockets of overvaluation in both large cap, mid cap and small cap. Whereas the way the large caps are positioned, particularly in Jan-Feb, it was more acute. Guys were selling or most of the large caps aggressively, giving rise to an opportunity for you to buy. Now I would say we are in moderately attractive territory and not in very attractive territory longer.
Okay, we'll give a little bit of a breather to Naren and get right back to him, because it's very interesting that he has that view completely off from the IT space, avoiding that sector as a whole. But Dr. Narayan, I wanted to understand from you, what's the technical call? Some of the mid-cap IT names are feeling the heat today. It's not been the best when it comes to fundamentals, lots of concerns looming large. What's your approach?
I think if you look at the mid-cap IT space, then you find a very, very diverse universe, and they are all over the place, and there are select names like, for example, if you take Intellect Design or Majesco or a few of the stocks like these, they are doing pretty well. erstwhile winners like Persistent and all had really taken a big drubbing, and they are trying to make a comeback. So it's a very, very mixed bag if you look at the mid-cap IT space in the small cap, mid-cap area. And you can't really club them together as one sector, even though they may be under one umbrella. But I don't think movement-wise you can really club them. It'll have to be very, very stock-oriented kind of approach. I would think better would be prospect in areas like Zensar Tech and all, which are showing very, very consistent movement, and where I think the buyers are very strong. So Zensar is one I would like to surely buy. Maybe look at wannabe large caps like maybe Mindtree or some other at lower levels. So it's a very mixed bag. I don't think we have specific stocks or sector-based view on this one.
Kunal, 255. Let's get some trading ideas going from you, Kunal.
Yeah, Nikunj, the two stocks, I mentioned earlier, GNFC and ACC. The third stock which I would be looking at would be a buy on Reliance Industries. Now, that's more or less a carry forward of what I mentioned yesterday and today morning as well. Stock has broken out of a strong, I would say triangular pattern on the daily charts, given a confirmation of a swing breakouts, and the volumes in the last 2 days are moving in sync with the price momentum. So I would expect a continuation up move on Reliance Industries. So I have a buy with a target of 1120 now and a stop loss at 1070.
Okay, those are some trading recommendations coming your way. In the meantime, let's also take it across to Mayuresh. And Mayuresh, IT is the dark horse. Okay, we'll get in some trading ideas from all of our technical experts then. And Siddharth, what's on the radar?
So Hindustan Zinc is one stock which I would suggest to short over here. Today around 10% rise in open interest. Stock has been correcting from 230 odd to 210 and then showed some bounce back to 222, and from there we are seeing fresh formation of short positions today. The support which it has shown in last few trading sessions of around 209, 210, that should go, and it's on verge of going, and probably stock is heading lower towards 199 odd levels. Stop loss of 220 is recommended for the short trade.
Any specific idea? I mean, let's nail it down to one idea from you.
Well, I would look to retrade my morning buy call in Sun TV. That had flared up in the morning. Now in this hit has come down sharply. But at 490, 495 levels, I would retrade a long on this one with a stop at 482 and target 520 levels all over again.
Okay, those are some top trading recommendations from our technical experts. On that note, we slip into a quick break. More market analysis when we return. Thanks for staying on with us. This is Closing Trades, and we were in conversation with S. Narain. Just get him right back on in a bit to talk a little bit about his views, his bets, and what the outlook is for the markets. Well, volatile is indeed the word to describe the kind of session that we're having now at 87, 83. The broader end of the market, though, it's a completely divergent move that you're seeing, as the mid and the small cap index is completely unfazed by what's going on with the mid caps. Those are some interesting movers. Eicher Motors has definitely picked up steam, currently at the high point of the day, 23,090. It's looking strong, while a lot of the quality mid cap names, as I just flagged off a while ago, have definitely caved in. TVS Motor as well has picked up activity. It was lying stagnant around the 322 mark, and now is currently at the highest point of the day. Pull up a JBF as well for you. That counter is showing you a double-digit gain at this point. ITC is currently perched at the high point of the day, and that's a 16% notch up for JBF. Den Networks, of course, a newsmaker of the day, 77 is where it's currently at. Prestige Estates looks pretty strong, and Thermax too is one of the outperformers from the broader end of the market. Come in, Kunal, on an Eicher Motors. How are you monitoring this stock on the charts?
Yeah, I think it's been a decent recovery for the stock in the last half an hour or so. It's taking support around that rising trend line. I think if you look at it from August, supports closer to that 21,250. I think from there on it's taking support on that rising trend line. So I think anyone who's looking to go long on the stock can probably hold on to it with a stop loss of closer to yesterday's closing at 22,500. I think the previous swing high for Eicher Motors could be the possible target, but no real signs of stronger signs in terms of a breakout has happened on the daily chart. So I think I would probably wait for a at least a 200 to 50 point further dip, because then I think the risk reward for going long would become better for the stock.
of you coming in on Aisha, currently looking very robust on your screens. But let's get right back then to S. Naren, who's in conversation with us, perhaps third time lucky. So Naren, take us through your views on IT. I believe you're completely writing off the space. What's the call?